the core question is how much information about the business is the right amount to share with your manager, your leadership team, your leaders internally, right, at various levels.
I often worry that if you don't share enough, assumptions that employees make will be used against you, the owner. I try to generally share as much as possible without sharing too much. And so where's the TMI line? That's what this entire conversation is about, is where is the line between enough and too much?
But again, I have this thing in my head and I'm not actually saying it to them very clearly, right? So every one of them is just making their own judgment call on what they can and can't say to the rest of the team. That's just a recipe for failure on my part.
And this is the hardest part about small business ownership.
Newco Risk is a specialized insurance brokerage focused on the needs of financial sponsors, including private equity firms, independent sponsors, and search fund buyers, and the companies they acquire.
Bay Business Group is your plug-and-play finance and accounting team. They handle all the unsexy but critical accounting stuff: bookkeeping, payroll, bill pay, invoicing, and budgeting, using modern cloud tools with clean weekly and monthly reports. Small businesses do not need more fixed costs and more headcount. They need some staff accountant support, some controller support, and some CFO support.
This is what they do. All of their clients get a dedicated controller/CFO, an accountant who knows their business, meets with you regularly, and helps you make better decisions. Owned and operated by former searchers and former big PE accounting due diligence providers.
All right, welcome back to The Intentional Owner. It is me, Kostub Dio, with Sam Rosati as always, and it's another episode of just two dudes talking to each other. Because that's what the podcast world was really missing.
Yep, just two dudes with struggling hairlines, not exactly the tallest men in the world, talking about stuff, kind of doing a little self-therapy. Can I give a free ad?
Yeah, go.
So we are going to, at SM Bootcamp, do our 20th cohort next week.
Sick. Wow. Congrats.
Although, by the way, next week, by the time people hear this, will have been a while ago.
Great. So by the time this goes out,
we will have done our 20th.
You will have completed.
And so it caused me to just think and reminisce a little bit about, the old days. The first one was in July of 2021. And so COVID in the rearview mirror, and had been a small business owner for a few years then. And it's just funny. It was totally to scratch an itch and just sort of pay it forward. And so it's fun to see this community, this ecosystem, not SM Bootcamp, but ETA in general has just
grows up.
It's grown up. It's become a thing. And we're pumped. And maybe a little bit of news is we have always been you have to come to Tampa in order to participate. And that's the threshold, which is frankly why I haven't asked you to be more involved, because it is the teaching here, the deal, everybody here in person is the magic. But we are going to take a fairly big jump off the deep end, or jump into the deep end, by running our first digital cohort this summer.
I thought you had the live boot camps.
The live are always in person.
I'm sorry, the not the live. I thought you had an online version of the boot camp.
We have essentially a small group coaching program called Accelerated Success. We do. That's online. But everybody
it's not the whole week together.
Exactly. And so we are going to, for the first time, it's taken a lot of work, but we're going to do our first one online and do our Sunday best to mirror the experience.
Amazing. I love it. That's exciting.
Yeah, it is. It'll be fun.
Good stuff.
Cool.
All right. Should we dive into our actual topic?
Let's do it.
Okay. So the very high level way to, set the scene here is the core question is how much information about the business is the right amount to share with your manager, your leadership team, your leaders internally, right, at various levels. And when we say how much information, we're talking kind of the behind the scenes part of being a business owner. So examples include what is the salary you're taking, right? Whether or not you've had to cut it while you're in the J curve. just the monthly P&Ls? Do they know your SBA loan balance, right? And like your monthly payments? Sort of timing on sharing that information, is on a lagging basis, on a live basis, like all of that, right? I think it's a really interesting topic. And it's like one thing if you're at a big public company where it's all just anyone can look it all up. It's very different in a small business setting.
Okay, so just to back up, do you have like an overarching answer here? Because my overarching answer is like almost everything you do in entrepreneurship, everything you do as a business owner, there is no right or wrong answer. This is not black and white, and it should deeply align with your philosophy on how you manage your business.
Correct. I don't have an overarching answer at all. I know from having spoken to a lot of business owners over the last few years, like some of the approaches people have taken, right? And the pros and cons. But no, I know business owners who, bought with SBA debt, who their team knows the SBA loan amount. The P&Ls are published monthly, not even just to the manager layer, but like to the whole team. And so people know exactly how much money the owner is or is not making. And then there's, lots of folks who I know that are, hey, like, they get a KPI dashboard at most at the manager layer, but nobody other than them has true P&L visibility, let alone balance sheet visibility. So I've seen the whole spectrum.
Got it. And I'll just ask, and you can say no.
Yep.
And I think you generally have shared a lot publicly, which
Yep.
I'm assuming you assume means it makes its way back to everyone because it could easily.
Totally.
So what's the answer for you?
Yeah. So for me, what I have right now is my operations manager, she has the most visibility, right? And so she has full access to P&L. But I give it, like, I kind of put it together every month. I've actually done a bad job of keeping her up to date monthly, but at least every quarter I'll go through the quarterly P&L with her. I'm still ultimately the P&L owner, to go back to that, conversation with Denise from a few weeks ago. So I'm still the one who like goes through the P&L to try to figure out what's going on with it and asking all the why questions. So right now it's more like I'm trying to train and help Flavia, my ops manager, like understand how to ask those questions, right? And understand how things moving on the P&L matters. It's a little bit more of a training tool for me right now than a management tool. But she has full P&L line of sight. Then the leadership team, in the form of our sales and our crew leads, they get our weekly KPIs, which includes revenue and revenue versus budget. It includes our, labor rate in, or revenue per labor hour. It includes kind of new sales and backlog. So it's quite important information, but it's not going into the cost structure of the business or the balance sheet at all. And like taking a step back, when I think about my role and philosophy around this, like the balance sheet side in particular, right? Like how I have chosen to capitalize my business with SBA debt and investor equity and my own cash and all of that, like because of how I have set it up, I have certain equity upside and downside from the personal guarantee, right? And so to me, like my trade, so to speak, with my team is that they get to have stable, calm W-2 jobs where, that they're stressful at times, obviously, like any job is, but they are not riding the balance sheet stress with me. That's sort of my job, to ride the balance sheet stress, because I'm the one who gets the upside of the balance sheet as well.
Okay, but I'm going to press you a little bit.
Yep.
So that means the trade you have implicitly or explicitly talked about is they have a cash compensation program, and that they are getting stability. And because of that, they're not getting the downside or the upside. Now, there's ultimately downside and ultimately upside, I would assume.
Of
but
course.
in the short to medium run, you're bearing the downside and the upside. Bearing the downside, getting the upside if it exists. And so has that been quantified with them?
That's a fair question. Not really, though. I think the way I think about it is the more somebody's comp structure plays in the upside and downside, the more they need to know and understand it, right? And so like my operations manager, she has part of her comp structure around bottom line profit, right? Which nobody else on the team has any of their comp structure tied to bottom line profit. So
Right.
she needs to understand the P&L.
Right.
Whereas for the rest of our kind of crew leads and sales, their variable portion of comp is really focused on like productivity metrics and KPIs. It's not based off of straight up P&L or bottom line profit. So that's why like they need to see their KPIs, because that's the part that their variable comp is based on. They need to be able to feel the up and down of that. And that's it. And then the crew, like they're on just straight hourly, right? Like they don't have that type of variable comp. And so it's just like for them, they should just get to feel like they have a stable 40 hours week in, week out.
Got it. So, and to be clear, your ops manager who is comped on the bottom line, that
Yep.
would be on EBITDA so that the balance sheet doesn't impact the bottom line for her comp calc?
A bit. The adjustment I've made is I don't include some of the cost items that I still have full control over, because I
Got it.
really want her to feel. So I've made my own made up metric called operations manager profit. And
Oh,
so
that's fair.
the items, so the items between that number that she is comped off of and EBITDA are basically marketing, like advertising spend, because I
Yeah.
own that entirely still. And so she just doesn't have that much control over it. There's a certain number of things like insurance is a big one where she has some control over it based on how our fleet and safety program goes. But for the most part, like I'm the one who's shopping our policies with our broker, and I make the decision on if we're going to change brokers or not. You know what I mean? Like that's not her purview.
I would still call that generous, and knowing you, like incredibly thoughtful. So, but the point remains, right? Like the trade you've made with your team and the upside downside, it's implicit. They all explicit. They understand the trade that's being made. And so actually I've gone one further. And to be clear, I'll like refer to a somewhat of a prior life as a self-funded searcher and then an
Yep.
owner of self-funded search companies.
Yep.
I generally would be pretty clear early on with, call it like the leadership team. It depended on the company, what that meant. That because I think the risk is there's a perception that, well, these kids, because we were pretty young when we acquired you too.
Mm-hmm. Yeah, totally.
Where did they get all that money? Are they rich?
Yep.
Do they have a bunch of family money, a bunch of cash laying around? They could just buy this business. And so I think the one way to frame our entire starting relationship was that no, we didn't have millions of dollars of cash in our bank account to spend. We took a big risk and used a bank loan that we personally stand behind in order to give us the opportunity to go build a business, make life better for all of us, including, the owners' families.
It reminds me actually, no, finish your thought.
Well, no, I mean, the thought is it allows you to say the point, which is, to be transparent about the riskiness of the endeavor we took on to do this and to level the playing field, or at least that was our intention, was to level the playing field with information shared.
Well, so it's an interesting, I remember a couple of years ago bringing this up to one of my senior guys and being like, hey, like, I don't want the team to feel like I'm like holding back on them. Like, we're having some like string of equipment issues, like, and the morale was low because of that. And like, I didn't want them to feel like I'm not buying new trucks because I'm like taking out all this money from the business, right? Because that's clearly not the case. And I asked this senior guy on my team, like, hey, give me like the blood pressure, out there. Like, do people think that? Or like, help me understand. And he very nicely, but kind of bluntly was like, well, we've seen where you live. Like, we don't think you're rolling in it. Because at that time I was still living in this apartment down the street where you could like rent a common room, for meetings. So I would rent that common room to have team meetings sometimes. So they'd all seen like I just live in this like random apartment building in Seattle. Like,
was this the apartment building where like the guy who lived nearby with the parking fiasco?
Yes. Oh no. Sorry, no. That's actually new. That I still live here with the parking fiasco. That's my current life. So anyways, it was kind of a funny moment of like, okay, like I guess that specific issue I'm less worried about, but I've had that worry of like, I don't want the team to think I'm just got like millions in the bank that it could get deployed because it's just not true. So I
Yeah.
have actually with the whole team knows I used a loan to buy the business, and the whole team knows that we have investors.
Okay. But then I think where it's important to be more transparent, so philosophically, I take the transparency approach.
Yep.
I often worry that if you don't share enough, assumptions that employees make will be used against you, the owner.
That's fair.
And so I try to generally share as much as possible without sharing too much. And so like, where's the
Correct.
TMI line? That's what this entire conversation is about, is like, where is the line between enough and too much? And
Right.
so, if you flush that out, we have a fleet that's old and breaking down. Why aren't you reinvesting? Well, I've historically then said something along the lines of, well, hey, look, like, all of the profit we generate is generally going to a place, the bank, that helped me fund this. And that won't be forever. And and then usually I would like to go even further and say, like, because if all you say is bank, 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 debt, 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 then they start to worry, well, is there too much debt? Are our jobs at risk?
Totally.
And so, to flush it out and say something along the lines of, remember when we bought this, like the business was great as it was. There's plenty of room from a revenue, profit, everything standpoint to keep things going and to help us grow. But the excess profit that would be created, that was created for, the former owners, for a while, that has to go to the bank to pay off that obligation. And that's why I can't just be loosey-goosey with cash and do all the things we'd love to do one day. Like, in some businesses, prepay discounts on payables, or, buying equipment and fleet in cash. All those things that our sellers in various companies had the benefit of, it's because they were running a business debt free, and we didn't have the cash. We had to borrow it and pay it back.
Totally. And I think there's a dynamic where some searchers who especially come from corporate world, like it's such a given in corporate world that like we have to run the business efficiently. We can't just like invest willy-nilly, like it's just like there's this kind of mystical owner somewhere in the ethereal, that's not the word, Ethereum, whatever, in the ether that exists, and like
You're a crypto bro.
I'm not. I really am not. But but like that owner, like we all report. But the problem is when you're the small business owner and you're actually running the business, like they know it's just you, right? And it's not like you can't kind of hide behind, as like a manager, you can't hide behind like this like haze of the ownership layer who nobody ever sees.
I agree.
So one version of TMI though, interestingly, so when I hired our operations manager, right, and I think I've talked about this before, but I took a pay cut myself, right, in the business in order to, like, it just stressed me out. Like I didn't want to overburden our P&L, and we needed the operations manager more than I needed to take a salary. And so I cut my salary meaningfully, and that was the right choice. And I feel very comfortable about that. Having done that, I would like at some point to raise it back up, but we're, like that'll come when it comes. But I told actually the same senior leader who kind of gave me that other, like I check in with him sometimes to get the like, what's the pulse of the crew.
Smart.
And I told him this, and he's like, yeah, I wouldn't mention that to the team. And I was like, oh, interesting. Like, why not? And he's like, well, like, I don't think the team actually like that would start to stress them out, right? Because that starts to feel like, oh gosh, like we're cutting into our margin of error a lot, which like I totally get it. Unfortunately, like I've done it long enough, like I just eventually had to sort of be more explained, just because it is a reality of my life. But like his instinct there, I think, was spot on.
Fascinating, right?
Yeah.
It's like you want to share enough so that they know that you are bearing a lot of risk in order to be building and investing and growing, and yet too much.
You don't want to spook people.
You spook them. Exactly.
Because I mean, and part of the challenge, right, is like part of why we were able to take the risk is because we are naturally have to be more risk tolerant people, right? Like not definitively, but I think like on average, searchers who have actually closed deals are probably on average more risk tolerant than like the average person, right?
Have to be.
Um,
Yeah.
have to be. And so like, but then all of the people on your team, like they could look at the exact same risk profile you looked at and been like, oh, this is a crazy choice because they're just naturally more risk averse. And that's totally reasonable, right? That's why they want a job and not to own the business. And so there's this weird dynamic of if I feel like even if I were to explain exactly why I did all the decisions I made and why I think this all works and why I think the risk is tolerable and blah, 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 like my team could very reasonably look at the exact same set of objective facts and be like, no, you are crazy and you take too much risk.
Totally. You know,
right?
it's
So
funny
that's the part that
too.
makes it harder.
There were so many things that happened beyond your control. Think about like rates. Would you say like 5.5, 6%? And then
Yep.
it topped out at 10. So 400 bips on a loan. We'll ignore how much.
Yep.
And let's just say that took 100K of cash profit out of the business every year. Well, that was your risk to bear. And it's funny because obviously I talk to and see a ton of searchers. So do you. And almost all of them, without exception, say they're doing this for independence and agency.
Yep.
And there is another side of all that. And I think it's healthy to remind yourself before you dive into this, like, did anybody see those rates trending up that way and what it would do if you had floating rate debt?
Yeah. Well, I joke about the fact, like, I have a lot of independence and agency in that I didn't have to ask anyone to cut my pay, right? Like, I didn't need anyone's approval.
So true. All right. So I want to propose something to you.
Okay.
Let's say it's 2028 and all of the stuff you've done is paying off.
Mm-hmm.
You're generating, well, let's just assume like the debt is still there, but you're generating 50K a month of excess cash flow.
I like where you're going. Tell me more.
I know you like that, but you remember there's downsides with every upside.
Yep.
So now people start realizing, God, the business has grown a lot, ton.
Yep.
And you'll just be able to feel it. More calls, more jobs, more crew. And are you going to do anything? Obviously, you're going to have a capital allocation decision to make, but let's say you decide a lot of that will accrue to you. You sort of have a nicer car or a nicer house, and yet, like, sometimes it's better to be a little frugal on investing in equipment, and capital allocation decisions are a fundamental role that you play as owner. So it's kind of interesting, right? Like how do you share that?
Yeah, it's a good question. Like if I had I haven't had this issue of excess capital to allocate for a long time. So if I had that issue, what would I do with it? That's a whole different question, but it's really like, how would you communicate that to the team?
That was the question. Yeah. So, and assuming like, okay, now you're getting close to 40, let's say, and you decide to just, how do you say this? You get the reward of having bet on yourself and taking the risk. You took your side of the trade. Then what happens when like you sort of resist some FF&E upgrade requests all while like you got a new car?
Yeah, that's a really good question. Yeah, I mean, where my gut goes as you ask that question is part of my responsibility as the owner is to have hired leaders who have just a strong sense of conscientiousness and or ownership in the business, right? Like where they have, whether it's a financial whether it's, like a percentage of P&L or a literal percentage of equity, right? Some sort of stake in the business being a well-run business, right? From a financial standpoint. And so I think I just don't think any business can succeed long term if the key people in it are not understanding what it takes for a business to exist long term, right? And the decisions that have to be made. And so what I and this feels like a little bit of a cop out to your question, but I think I would hope that by the time somebody else is owning FF&E decisions, right, like purchasing new equipment and making that trade-off, I would hope that that person is sufficiently trained and sufficiently incentivized that when they come to me with the hey, I want to go spend $250K on a new bucket truck, they will be able to tell me why that's worth it and give me the actual rationale for it. And then assuming they have done that well, I will say yes.
Yep. I think that's exactly the right thing to do. I'm just saying that even if you give that answer, you're going to have to deal with perception issues.
Oh, absolutely. Yeah, this is always a challenge, right? Perception and practice are so different. I mean, one example of that, right, actually, to pick on the bucket truck issue, because we could totally use a second bucket truck. Right now, our most important thing is keeping our schedule full for 4 crews, right? That actually matters more. And so I actually care less right now about optimizing the 4 crews and their pace of productivity, because we don't have this excess load of jobs for them to finish, right? So every incremental dollar of capital today, I would rather allocate to marketing spend than towards a payment on another bucket truck, which would make our 4 crews faster, and if anything, make my problem worse, right? But when you're from the crew standpoint, it's what are you doing, right? Why aren't you we should have another bucket? That's a clear thing that we should have another bucket truck. And so kind of explaining that as hey, I actually don't want our crews to be more efficient right now. That's not what I'm solving for. Eventually, once our 4 crews are totally full, and now I'm hey, how do I make our 4 crews more productive? That's when I hit buy on the bucket truck. That's a hard thing to explain in a way that doesn't make people feel crazy.
Yep. I know. And it's even worse if because I've seen this too, some owners who searchers have bought from are kind of like toy people. They look at their equipment, their fleet as toys, and so their team is always using the best stuff.
Yep.
And it's a tough thing to comp against as a new owner.
Oh yeah, no, breaking that cycle is brutal. I didn't have that problem, but I can imagine. So okay, so tell me about in the fencing roll up, to the extent you can share. It's obviously it's from before you had a sponsor backing you to after. Can you talk a little bit about how that has evolved from a sharing information with the team and whether it's P&L to capital structure to all of that?
Yep. Well, the broad answer to start with is maybe counterintuitive. I think we share more deeper down into the team now that we are sponsor backed and have many more leaders across the country, divisions of our business. We have much better information. And so now we both have the means to getting better information and faster. And we have sort of we have a hierarchy of people that lead our business across the country that we need to get information down to. So there is a weekly KPI dashboard that goes out to a lot of people. And then obviously there is full financial package that goes out to fewer.
Wait, sorry, for KPI, what is a lot of people? I'm just curious. Are we saying 10? Are we saying 50?
Closer to 50.
Yeah, cool.
Yeah, and to be clear, just to comp out, let's call it 500 people in the organization.
Oh,
so it is. I'm almost I've never thought about this, so it's a good question. I think before we had a sponsor, before we had a lot of this data, before we had many locations, lots of disparate leaders around the country, it was just a very small group of us kind of running the show. We never had great information quality at the tip of our finger. I think we went 2 years without a CFO. So maybe longer. I think it was 2 years.
Though funnily enough, like since I share my KPI dashboard with my crew leads and sales team, like as a percentage of the total team, that's way higher than 50 out of 100.
Yeah.
Or I mean 50 out of 500.
That's a good point. That's a good point. Percentage is probably not the right way to think about it.
Yeah. But 50 people is just like, yeah, like it's hard to imagine, right? Like, okay, how are 50 different people going to interact with the same set of data and like come out with the 50 different types of actions you want them to come out with?
True. So, but let me clarify too, just so we're clear. It's not 50. I don't know the exact number. I'd have to like go to one of these emails every week.
No, that's
but
fine.
it's definitely closer to 50 than 10. And
Yeah.
I think it's also worth saying we have 13 physical locations today. So
Jeez.
each physical location has a location leader. We have 2 divisions of our business and then we have, we run EOS. So if you think about the functions of every business that runs EOS, kind of like sales and marketing, ops, and accounting admin. And so we have KPIs that are much more than just like leading financial KPIs, right?
Totally.
Things like safety and tenure. And so things that like those KPIs speak to non-financial oriented people and in non-financial roles.
Yeah. I mean, what you're making me think of is like, it's one thing to share information with the team, right? The challenge is making sure they are understanding from the information what you want them to understand.
Good point. Yeah, it's a good point. Right. And let's step back a little bit. And I've actually texted her while we've been on here. So she's okay with this. So
perfect.
This entire conversation today is based on a friend of ours, Tara Henderson. So let me just give her some credit where credit is due. Tara is Kevin Henderson's wife. Kevin is my partner at SMB Law. And, just like not an OG of the ETA world, but has sort of, he's
been around.
He's been around. He does tons of deals, knows everyone. But a few years ago, Tara stepped in and started helping us run SMbash. And so when we say like the group running SMbash, like you can give Kevin and David Brackett a lot of credit, but Tara gets just as much.
Totally.
But then what was really cool is, God, I'm going to get the timing wrong, but a few months ago, 3-4 months ago, she and Kevin bought a commercial vehicle wraps business. I don't think it's just commercial. I think they do some like
I think it's both. But yeah.
And that's in Dallas. And so now Tara is probably heard Kevin talk about kind of this stuff for years.
Yeah.
But now she's experiencing it as a business owner. And she sent us a bunch of questions. So that's the genesis of our conversation.
No, that's great. And that's where like it's such a relevant question, especially as a new owner, right? That like, hey, you step in day one, you already don't know anything of what's going on. You're just trying to figure out the data for yourself. And then very quickly, the next question is like, okay, but then should my team know this data too, right? And like, what do they, and like, if I unwind the clock a little bit for my, I've owned this business a little over 4 years. The initial versions of the KPI dashboards and stuff, like nobody saw them other than me for at least a year, probably 2 years, if I'm being honest. I don't know that I even shared it 2 years in.
Yeah. I mean, I still think generally the idea of sharing KPIs is pretty uncommon.
Mm-hmm.
And I actually don't think it's out of malice of small business owners. I think if you're referring to like an original owner or baby boomer, there's definitely a mentality among that generation around sharing and sort of the mental difference, everything difference between an owner and his or her employees. But I think as far as like our generation new owner, I think it just has to do with like fear and not really knowing what the norm is, not knowing what's acceptable, having to figure it all out on your own, which is why it's pretty cool Tara was willing to just ask.
Right.
So she had a good question I wanted to make sure we cover. Okay. I'm going to reframe it a little bit by saying, what happens if like, information is being shared further than you want it to be. Or said another way, can you actually expect your ops manager to not share it further? Can you expect, a super or a controller or a crew lead not to share it further down into the team? Or
That's
should
a
you
great
assume
question.
everything that goes out there gets to everyone eventually?
Right. This is a cop-out answer, but I feel like both, right? Like, I think you should assume that everything you share can probably get out, right? And just be mentally aware of that and be all like that. That falls to me within like small business paranoia, like writ large, right? Like you just have to be mentally prepared for that to happen. And it's totally reasonable to set expectations of your team around this and then hold them to it.
And I fundamentally agree. I think people that are getting information that is confidential should know how confidential it is, should be
Yes.
held to a confidentiality standard.
Yes.
And yet, as soon as you open the kimono as the owner, you got to assume it's going to blow back.
Important though, thing you just said, right, is like the team needs to know what is and isn't confidential, right? I feel like that's an area where business owners sort of just assume like that they will figure like your team will have the exact same judgment you have in your head. But like for my ops manager, like I'm thinking about it right now. Like I don't know that I've ever explicitly said to her like, "Hey, I don't want this metric to be shared outside of you and me."
Yeah,
right?
or like the
And
P&L is for us, but
correct.
the KPI dash is
Correct. And I've never said to like the crew leads, like, hey, our weekly revenue is just for you and the sales team to know. Like, actually, that one I don't care that much about, so that's okay. But like that, like again, I have this thing in my head, and I'm not actually saying it to them very clearly, right? Like, so every one of them is just making their own judgment call on what they can and can't say to the rest of the team. Like, that's just a recipe for failure on my part.
fascinating, right?
The problem with this, right, is like it always reveals that like 90% of things people get frustrated with their employees, like 90% of them is usually your fault because you just didn't set expectations correctly or define expectations well, or, all of those things. There's only like 10% of it where like you set all of that and they didn't do it, and then you just have to let them go.
And this is the hardest part about small business ownership.
But like with my ops manager, like you're making me like this conversation is making me think like, oh, I need to go back to her and set expectations around like, hey, what is this a confidential? But then after that, once that is set, like I have an expectation that she will follow that, and if she doesn't, like that will be trust disrupting. And like for her to be in the senior role she's in, it is super important that me and her trust each other. Like I trust her deeply.
All right, I have another one just to make sure. Like,
Yep.
she's got Tara. You have great questions here. Here's another one. So you are a new business owner, and I see some questions you posed are almost assuming the necessity of granting equity to a key leader, a general manager, etc. It's like it's not said, but it's implied in the way you're asking some questions.
Mm-hmm.
So over the last 10 years, I think where I land on it is as a new owner of a truly small business, I would check your assumption. I think it's so easy to assume like key employee, regardless of title. And it's easy to assume that person is going to immediately desire, value, appreciate equity, that it's going to cause behaviors that are akin to like an employee thinking like an owner by becoming, through a grant of equity, a small owner. And I think that is a sort of a mistake I made early on, thinking, well, duh, like, of course, if I grant some equity, they're going to be an owner and therefore think like an owner. And I don't think that anymore. I think like other mechanisms can work far better. Like, one basic question: does the person you're referring to, is money a driving factor for them? Or is like a very predictable or flexible work schedule the driver for them? But if money is a driver, I'm not saying likely, it's very possible a structured cash bonus plan is more valuable to them than equity. So before we even kind of go down the rabbit hole of the equity questions, Tara, I'd say check your premise at the door. Go have conversations with them after it's been a little while.
100% agreed. I think the biggest one for me, right, is in any comp structure, whether you're giving equity or a cash bonus, whatever, right? Like, what matters more than the actual value is the perceived value, right? Like, how does the person receiving the compensation value that? And thus far, I haven't offered equity to any employees yet. What I have sensed though is that the longer dated the payoff is, the less perceived value it has. Not entirely, obviously, to some people think about these things differently, but that is like the more you want actions to be impacted, the closer you need the reward to be kind of matched to it. And the strange thing is, like, giving equity is one of the most expensive things you can do as a business owner. And so it's a
And
strange
far
thing
dated.
and far dated. Exactly. It's like in small business in particular, it is one of the largest gaps I've seen between actual value and perceived value. And that's just bad. Like, no one's happy with that.
Another one, the value of it has so little to do with that person's responsibilities.
Totally.
So if you think about it, equity is indefinite. So there could be a payout in 10 years or never.
Yep.
It could be way more or way less than the perceived value. And
Yep.
if it's based on equity value and the role is sales or ops, not only do
Yep.
they not control much of that value, but you still, the owner, control the lion's share of it. How you capitalize the business, the way you push for revenue growth, margin, SG&A, like turn it around. Like, being a 2% owner of a small business run by a single person, like, you have almost no control in some sense.
Totally. And so that's why, like, it feels like a lottery ticket. Like, maybe this will pay off someday, maybe it won't. It has no relation to what I do every day. And so, like, it just doesn't incentivize the actions you're hoping it would incentivize, that they think like an owner. Because, like, they're not yet, right? Like, it's just not really.
So maybe
It's
that's
just
the
not.
reframing that we should suggest to Tara, is not to try and figure out how do I get, key person to think like an owner, but how do I directly impact their behavior to align to outputs I want them to have.
Yep. No, I think that's exactly right.
produce.
And so it goes back to the same place though with her core question, right? Which is sharing information with your team, right? Like, if somebody has equity in the business, the implication is that then they should get more information,
Correct.
right? Because they
Yep.
are, effectively owners, which is probably true. But the problem is, like, if they don't know what to do with that information and they don't know how they actually impact the data, right? And, like, that's a pretty good signal that, like, oh, they're not actually supposed to be equity owners yet.
Agree.
Right? So if you have to give that information to somebody and they don't know what to do with it, it's probably not the right person to be granting equity to anyways.
Agree. And maybe that's the whole point. Maybe that's like where we land is, if what this is all about is information share is meant to align us all in our mentality, get us all thinking and behaving like owners, maybe that's not what the objective should be. It should be to think like an owner of the things that person can control and to drive outputs related to that function they control. And so maybe it's like deeper, maybe the answer is like much deeper visibility into that thing.
Like the thing that just really specifically matters to them.
Correct.
Yeah, I think that's right. And that's where, like, I mean, it reminds me of a discussion I had with someone around, like, if you give somebody too much information, they don't know what they're supposed to focus on, right? And, like, you feel like you're being this really great, transparent business owner because you're sharing everything with the whole team. And what you're actually doing is you're just kind of like giving them data overload and they don't know what matters. And so it's just sort of unhelpful.
Yeah, totally.
I'm probably guilty of that. Even my like weekly dashboard, which I think is a pretty tight, like there's not a lot of info. But like the reality is so it has our revenue, it has our sales, it has our backlog, and then it has our PHC department. But it's like our crew leads can't do anything about our sales. Our crew leads can't do anything about our PHC department. Similarly, our sales team can't really do anything about like how our week to week scheduling went. So it's like I'm kind of giving almost too much information everywhere. Like if anything, I should have like a dashboard per team kind of a thing. Obviously, that's just like too much work in a sense. I guess it's not. I could just screenshot it differently. But yeah, it's a strange issue, right? It's like, okay, wait, no, giving information is not actually like the value. It's like what I actually value is them understanding what they need to be doing differently or more of going forward.
This is probably the deepest I've ever thought about this info share and its objective.
Right.
I'll bet you most of us are guilty of assuming we should be sharing a lot with more people. And so we lean towards that and we don't, because we're trying to get people to think like us, think like owners, like align our interests. Right. And like net, that might be counterproductive.
Yeah. I think part of it is when we want to share more information, it feels like a shortcut. It's like, hey, you just give people all the information and then they'll just do the right things. I just like, it's an unreasonable expectation.
I would love to know like how the sellers of companies think when they hand over the keys to people like you and me. They think the same way.
Yeah, exactly. It's like, all right, yeah, you got our financials. Good luck.
Deer in headlights.
Yeah, exactly. But no, so I think as we think about this question and kind of wrap up the discussion, to me, right, there's not like where you started with this, which I think was right, is like there's not a right amount of information to share, right? There's not like a one size fits all answer here. But I think like trying to move much more closely to why do you want this person to get this information and what do you want them to do differently as a result of having the information?
Yes. And so maybe the answer is maybe like communication in general. Keep it focused. And so if you're going to share, narrow what you share, allow for, depth that aligns with the function that person can impact and control, but then probably to like follow up and have more conversation about that one or two things.
Mm-hmm. No, I think that's right. I mean, and then this goes back to like, okay, is somebody having good one-on-ones?
Yes.
And like, are they actually getting the feedback loops? Yes. And like, this just turns into like management practice in general. But I think that's where I'm landing this in my head is information sharing is not a substitute for good management.
Boom. Maybe that's it too. By the way, just to shout it out, sounds like SMbash was a really cool get together. It's always like an annual reunion of what seems to be like the OG community of those of us who were in ETA, self-funded ETA 10 years ago, kind of getting this thing started. And then every year we get a bunch of people who go from being searchers to operators. And so that's a big transition, lots of stories to tell. And then obviously like the group of people coming in to become searchers.
I'm always surprised at both how many people I know at SMbash and how many people I don't know at SMbash, which is kind of cool.
Yeah, that's the whole point.
Two shout outs from SMbash, by the way. I think a first, even earlier shout out, obviously, to the organizing team. They crushed it as always.
Yep.
And I appreciate their work. Tara and Kevin and the rest, and David and the rest of them. So the two talks I liked the most, which I think if you're a business owner, the Justin Roffmarsh, which his last name is spelled Roffmarsh. He's written a couple books, but he's written a book called The Machine. And he's sort of, I would say, like a modern disciple of Ellie Goldrat's book, The Goal, which is about, theory of constraints. And John Matzner has slowly been sort of turning me into the next cult follower of Justin Rothmarsh. What it really is like me and John Matzner are like fangirling Justin, and he doesn't know what to do with us. But I thought his talk was excellent, and he has some really good YouTube videos online about kind of organizing your business around speed as opposed to around efficiency, and kind of it's making, like, I'm not ready to like write in a blog post about it because I'm still grappling about it with my head, but it's super interesting stuff, and I need to read his book, The Machine. So that was one shout out. And the other shout out was Jacob Hall from Kando Capital, who's he's a search investor. Gave an excellent keynote, which I think you and I should actually break down in an upcoming episode.
We are. So
yes,
in planning future topics, by the way, what's they called? Mailbag, grab bag. Can you DM us, email us, like any topic you want us to cover, send it to us. We love that. Like,
and by the way, the other topic I got from a listener, which I think I mentioned to you, but I would love to approach this at some point, is kind of the decision around starting a business versus buying a business as the search industry gets harder and harder. So I think that's really like the discussion that Jacob had around how the playbook of 2019 to 2021 doesn't work anymore. It's the perfect kind of setup to then discuss like, hey, like if that playbook doesn't work, what are our alternatives? And it's starting a business, whether it's in the trades or otherwise, like how should we be considering that as a version of ETA or entrepreneurship that maybe leads eventually to acquisition because you're now in the industry. But I think that was a really good question I got from one of our loyal listeners.
Cool. So back to your point though, to talk about Jacob Hall, what I don't actually remember if you just said it, like what his point was, because we're going to cover it, because I think, not to get into like search tactics, but it's a really interesting point he made.
Totally. I mean, maybe we just dive into that for a bit, because I think I'm like, it's interesting and I find it fun.
Go.
But okay, so I only took notes during 2 talks, but I did take notes during that one. Okay.
Well, I'll preview it real quick, because the whole headline is that the playbook that we all used as searchers 5 years ago, it doesn't work.
Yep. Correct.
That's not the big revelation. The big, I think, revelation is like the details, the why, the what.
Totally. So he basically suggested, and I think he's correct, is that from 2019 to 2021, we were in a period of very low rates, which is objectively true. I mean, setting aside obviously the COVID disruption, which, that hit different businesses differently. But like, if you really look at like 2021, when we were coming out of COVID, a relatively benign economic situation from just like what is the pressure, like things are growing, rates are low, and people were kind of like going back to work and ready to go relative to where we're at today. And so he basically said that there are 4 what he called horsemen of like a bad deal. And so the 4 that he raised was people doing max leverage, which really worked in 2021 because of how low rates were and how good the economic condition was. Much harder now. Second is overpaying, because of how multiples have just slowly kept creeping up despite the macro getting harder. The third was people assuming kind of hockey stick growth projections, which again, may be doable in those first couple years when search was really blowing up in 2021. Much, much harder, and very, just not the common, it's not the median experience that searchers are having anymore, is that, they hit the ground running and things are just growing up and to the right. Which, we've talked about a bunch, but it's worth highlighting. And then lastly is doing it alone. Like, I think this has been a ongoing debate for many years in both traditional search and self-funded search, is doing either the deal by yourself and owning 100% of it with no investors, versus having some investors for support, versus having a second searcher, right? And splitting economics even further. And so those were kind of the 4 parts of what he would consider the 2021 playbook that got a lot of deals done, that don't like that. Using that same sort of set of plays will get you in trouble in 2026.
Yep. I agree.
Agree. Yeah, exactly.
So, and I mean, to be clear, just so we can kind of date stamp ourselves, I started searching in 2018, acquired 2 companies in 19. When did you start and when did you acquire?
I was searching around 21, kind of early 21-ish. and then I closed in early 22. So I was at I'm the bleeding edge of
The heyday.
overpay, max leverage, where like basically when I closed, my all-in rate was 5.25% on my loan, but I had a 3-month interest-only period. And by the time my first full payment hit, rates had started to go up. So I never actually had a single payment at 5.25%. And my all-in rate peaked at 10.5 within about 2 years.
Wow. I mean, what's also fascinating is you're a financed like junkie and I can fake it. And every lecture we ever got in any educational institution said cost of capital goes up, valuation goes down. And I saw no part of that.
Absolutely not. I mean, and it's hard to figure out part of what Jacob was talking about in his talk is that the narrative of like the silver tsunami and the deals, like it's just so overstated because the actual number of actionable deals is much, much smaller. And so over the last 5 years, the kind of supply and demand market of small business acquisitions has much more materially moved on the buyer side than it has on the seller side.
Yep.
And so like any amount of multiple compression you would expect from rates going up has been totally wiped out by just like the sheer level of buyer interest.
Yep.
Which is tough.
It's brutal. And so then that's all great. And I think we agree. What do you do about it? Can we save that for an episode? Because I think I want to talk through. I have a lot to say about that. What do you do about it, given that reality?
All right, that's our teaser. That we'll do that as our next episode then, and I'll walk through what Jacob said as sort of best practices that he would suggest. But then I think you and I have a lot of thoughts. We're happy to hear ourselves talk about this topic.
Yeah, and I guess at the risk of a free ad, which I'm about to give. We have at SM Bootcamp gone on a run where we do these all alumni monthly calls where it's just a chance for our entire community, anybody who's come through SM Bootcamp, log on. And what we try to do is bring a different perspective every month. As part of it is like have an alumni come on and talk about a business they bought and their experience, kind of like this. But for the spring, I've tried to go on a run of bringing different investor perspectives to it, not just, hearing me, hear other people. So we've brought on Jacob and a few others that have been nice enough to join. And I tell you, the advice, the guidance, the war stories people have who see 200 deal opportunities a year is really fascinating. And the learnings from
it's just different. Yeah, the deal reps make such a difference. You start to have real pattern recognition.
So true. And then I think it becomes the pattern recognition informs like what is so obviously not a great deal to invest in and what works, how to differentiate yourself as a buyer and a capital raiser, which is what most searchers end up being. But then I think like these conclusions that Jacob is hitting on and we agree with, it's just fascinating to see, okay, now how do you change the tactics of your search? How do you change the tactics of like your capital raise? And I think the preview is like there's no great easy answers.
No, that's right. And so I think that's our next topic, in 2 weeks or whatever, is what do we suggest searchers do differently now? And then the follow-up on that is starting a business a good option or not? Because I mean, you and I have less experience there, but not zero. And
I got experience there. Come on, man.
Oh, sorry. I forgot. Yes, you're right.
Come on, man. First of all, we started this humble break-even podcast. That's a startup.
Well, this is true. That's true.
Can you read this logo?
SM Bootcamp. Yeah, SM Bootcamp. I hear you.
Come on, man.
Exactly.
SMbash. SMbash.
These are you're not wrong. I immediately understand. I think of you as a fencing roll-up guy, but that's fair. That's not your primary. That's not your
SMB Law Group. Come on, man.
I hear SMB Law Group was what was it? Most innovative law firm of the year in Florida.
That's right.
That's pretty cool. Congrats.
Yeah, and Eric won Managing Partner of the Year.
Oh, I didn't. I think I missed that. Nice. Yeah. That's huge.
I know. So
good for him.
But like to round it all back to not a joke, I think there's a serious conversation to be had around the start versus buy.
Yep.
And it doesn't mean that this is your point. Like, it doesn't mean you can't buy ever, but it might be better off to get started by starting and not to buy in some circumstances. And we'll talk about what those could be. And then
Totally.
I think the fallout from having heard Jacob, I to be clear, I didn't hear him live, but he joined our all alumni call right after, and then thinking through the sort of takeaways, there are lots of different ways this flushes through. Like, I want to have a conversation with you about working capital as an operator, not just a buyer. But I think pulling some working capital levers are like a fallout from this. There are so many fallouts from the overall conclusion Jacob's making. So anyway,
Totally.
we digress.
I actually invited him to fly out to Seattle and do the talk here as well for our SMB ETA group. So we're trying to put that together for June because I just think it was so worthwhile.
Newco Risk is a specialized insurance brokerage focused on the needs of financial sponsors, including private equity firms, independent sponsors, and search fund buyers, and the companies they acquire.
Bay Business Group is your plug-and-play finance and accounting team. They handle all the unsexy but critical accounting stuff: bookkeeping, payroll, bill pay, invoicing, and budgeting, using modern cloud tools with clean weekly and monthly reports. Small businesses do not need more fixed costs and more headcount. They need some staff accountant support, some controller support, and some CFO support.
This is what they do. All of their clients get a dedicated controller/CFO, an accountant who knows their business, meets with you regularly, and helps you make better decisions. Owned and operated by former searchers and former big PE accounting due diligence providers.